Hi, good day to every one of you. I'm Kumar. I'm Learn with Kumar and Cherry Academy. I know most of you students, particularly the CIMA Strategic Case Study students, will be sitting for the August 2021 exam in a couple of weeks. So I'm a professional tutor with more than 40 years of post-qualified experience and with 15 years of online experience. And today I want to record this video and to present it for you all on this strategic case study company Arrfield and on the topic business valuation. You and I know how important business valuations in our F3 area and also in the strategy decisions, acquisitions, mergers, divestment comes up. And whenever it happens, it is all about the valuations of business. So wishing you the very best luck. I want to make this presentation. And if you are interested in going for any tuition or getting your marks corrected, you can contact me on +9477 321 9387 9477 321 9387 on WhatsApp, or at the end of the slides, you will see our email address. You can contact me, and at very affordable rates, even at this last moment. If you want any revision, if you want any assistance in accordance with CIMA Blueprint 2021-2022, we will support you with all that. So here, I want to make this little presentation for you all. Right. So it's all about business valuations. Now, this time our company is a company that is involved in airports, and always you need to remember your vision, mission. Whatever we do strategically, it should be in accordance with the vision. So the vision is to be the world's best airport company. So that we should keep it in mind. So if we want to be the world's best airport company, we need to be in business of acquisitions of airports, because right at the moment, over the last 40 years or so, we have had acquired 6 airports. 6 airports in 3 countries, in our home country and in 2 other countries. But that's not good enough if we want to be the world's best airport company. And you have to be mindful that airports acquisitions, mostly it will be governments divesting airports, because you will rarely have a private airport being sold out. But you might have a scenario like this, a merger with some other existing airport company. There again, there may be valuation needs. But if it's listed companies, we do have a valuation. But if it is unlisted, that is mostly the government-owned airports being privatized, that's where the valuation can become very handy for us. So we remember we are a company that is having our financial statements 31st December financial year. So what we have got is 31st December 2020. But by the time you sit for the exam, it's 8 months later. So we need to remember that the figures, but they are on 31st December 2020, may not be the figures now as it is 8 months. So don't take the cash balance and say we had so much, or we have so much of cash balances, because that was 8 months earlier. We had that bank balance or the cash balance, whatever. And remember, this is a consolidated statement of financial position. So it's not the parent company only. It's the total consolidation that they have 2,167 million. So you need to be mindful. It's in 3 different countries and handling 6 airports. They must be having many bank accounts. So that also we need to be mindful. Right, okay. So the CIMA blueprint says, I can recommend and apply business valuation models. So in today's my presentation, I've specifically gone into the airport business valuation criteria, because if you can apply those things in your answer script, I'm sure the examiner is going to be very happy rather than being very generalized and applying the general thing. Why do we need business valuation? So as I said, if you are going for an acquisition of a government-owned airport, when they want to divest it or when they want to privatize, we need to make a valuation. There are not too many airports available for sale. Not too many governments will be putting up. It's not like selling shoes or garments or something like that. And there will be many bidders for these airports, large companies. And you have to be very smart. If you miss the deal, you are missing $1 million deal. So you need to be, as the senior manager finance, your advice should be sought by the board of directors, and you need to be very smart to make that valuation right. Should not pay too much of money. On the other hand, we should not miss out an opportunity because of our stinginess. Secondly, we might have some already listed airport companies owned by those of these airport company shareholders, owned by sort of fund in nature funds like pension funds, institutional investors mostly. Probably they would have had it for some time, and they might be now thinking of releasing those investments to the market. That may be an opportunity for our field to acquire some other airports. So we need to be mindful. These are not small acquisitions, big number acquisitions, big $1 million, billion-dollar deals, and we need to be very, very alert, agile. So we know business valuations traditionally depends on reported sales, profits, asset values, forecast sales, profit, asset values, the type of industry, level of competition, range of products sold. Now in airport industry, we have aeronautical income, non-aeronautical income, the breadth of customer base. Your customers are mostly the airlines. And then we have these our tenants in the shopping complex, whatever. Then we do have passengers. Then we need to look at the perspective of the buyer and the seller. Mostly the governments will be privatizing. So their expectations we need to fulfill. So these are the peculiar special matters that comes to the airport valuation. Generally, as I said, a listed company will have a market price, what we call market capitalization, market price plus into the number of shares. But we know when we want to acquire a controlling interest, just paying the market price is not good enough. We need to add a premium because the shareholders, the market will know there's a demand for their shares. So we need to add a premium. That premium is the point of negotiations when we are acquiring a listed company. But if it's a non-listed government-owned airport, we do not have a market capitalization or a market value. So we need to work out on our traditional business valuation. But what are the factors that will influence a valuation of an airport company? So we know traditionally there are three methods: asset-based, earnings-based, and cash flow-based. I think in airports, asset-based is also a very important valuation, because in an airport, the assets as in block need to be sold out, and airport cannot be sort of sold on a piecemeal basis. I mean, you can't sell the runway and you can't sell the terminal separately. So mostly airports will be going on a going concern basis, but it will have a high value of assets. Generally, the airport's payback period is more than 20 years. And therefore, we need to be mindful of the strong asset-based earnings, yes. And of course, theoretically, we know the cash flow is the most appropriate method, or the theoretical best method. So we need to be looking at all these things whenever we are working out valuations in a company like Arrfield. So recent airport valuation trends. Between 2016 and 18, most of the companies have worked out on EBITDA, that is earnings before interest, tax, depreciation, and amortization. The school of thought is it's a better kind of figure than earnings, profit after tax, because profit after tax is somewhat distorted with things like depreciation, amortization, all that. So most of the valuations are EBITDA. Between 2016 and 18, generally airport valuations have been 22 times the EBITDA. But 2013-15, during that period, it was 15. So probably the airport valuations at a very, very high state, around about 2019-20. Examiner has told us not to worry about the COVID-19 too much about it, assume that there is no COVID-19. So we can go with the present trends, 22 times kind of EBITDA kind of things. Unfortunately, we can't work out for our field group the EBITDA because we do not know depreciation and amortization, but we have 1,465 million 2020 profit. So we can see it need to be a very, very high valuation because the asset base is very, very high. Even at book values, it's about 66 billion kind of asset valuation. So the school of thought is airport valuations at historical highs, 22 times of EBITDA. Just about 2 years back, it was 15 times. But whether this good level should be maintained or not. Airports are a peculiar industry. Whenever there is an economic shock, they have a setback. They do have a setback. COVID-19, September 9th, September 11th incident, tsunami, terrorist attacks will have an impact, but airports will recover. The airport industry will never die. No country can today live in this world without airport. And airports and the GDP airport growth and GDP has some kind of a link. So airports will go through temporary sort of setbacks. Now we know at this moment of time, if we really take, because of the COVID-19, some of the airports are closed, the business is very dull, but very soon, when the airports are open, the travel will come to normal quickly. So that's the airport business. So it's a very steady investment, solid investment. It might go through certain economic shocks, but unlike many other industries, it will never die. That's something unique in the airport industry. So what are the airport assets? The airport assets are sort of an appealing class of asset for investors, particularly for institutional investors, on very strong growth fundamentals, diverse income streams, aeronautical, non-aeronautical, asset resilience. The key driver for value of airports is the traffic growth, highly correlated to GDP. Generally in UK, traffic has grown by factor 2 of GDP. So you can see there's a connection. When your economy is doing well, people will travel to your country, people will travel from your country. So whenever our field is thinking in terms of acquisition strategy, they should be thinking in terms of going for countries where there is good macroeconomic growth. I'm telling you all these things because these things in your answer script, if you write some of these things, you're sure you are to get additional marks. We need only 80 marks to get through this exam out of 150. Not a big task, but this is your last final hurdle. Put your best foot. You still have time. I'm recording this today on the 6th of July, but you have another roughly about 6 weeks time, 7 weeks time, which you can do this well, this exam. And if you put your best foot, you can do it. And if you need any assistance, please contact Kumar on 9477-321-9387. 9477-321-9387. And I will be there to help you in any manner for you to get through the exam. I take affordable rates from you. for my time, but don't worry about the price. What I need is to see that you get through this exam. Right. So what are the airport growth indicators? Airport generally they enjoy a very high operating margin. If you have done a ratio analysis, you will realize that the operating margin in even our company is all about more than 40% kind of thing. That is, operating margin is operating profit before interest and taxes divided by the revenue. So that's also a very, very high thing. Generally, EBITDA margins in the region of 30 to 60%. So very, very high, good ratios to work through. And I think in our company, operating margin was 40.4 knot. Our rival company, Skyline, it was 42.26%. If you need any of these ratio analysis, just contact me. I'll try to send you through email the analysis which I've done on the ratios. Yes, so this is what I've done it. We have a 4,200,000 operating profit against 10,325,000 or 10.3 billion revenue and 40% operating margin. Now, these are the things we should have it in our fingertips, in our exam. These are the pre-work what we should do. So you don't need to take the calculator and do the working. You can just write it and say, I mean, you don't need to memorize it to 40.4 knot. Just say, we are maintaining over 40% operating margin. That kind of things will make your exam script very, very interesting. In this exam, it's a 3-hour paper. We basically write on 3 sections of 60 minutes each. And you should do planning of your answer very well. Write for about 35 minutes, plan for about 20 minutes, and keep 5 minutes to finish it off every 60 minutes section. So 35 minutes of writing is about 700 words. Split that 700 words or that time of 35 minutes into the number of subtasks they have according to the mark allocation. For example, if you have 60% for the first task, allocate 60% of 35 minutes, right? Only up to that point, because you will be experiencing time pressure, but you need to be very, very exact to the point. Don't deviate. Don't move away from what is the requirement of the answer. I mean, don't take this as an exam. Think that you are working in this company. Your board of directors are asking something from you. Be specific to the point. Don't try to deviate and get out of it. When we are talking about the models like CIMA Code of Ethics or Mendelow's, don't try to explain the models, just apply the model. If there's something where you feel it's unethical, talk about the particular principle of CIMA Code of Ethics and mention it, but don't try to write about the 5 principles and try to explain it. That's not what is expected. We need to be very practical. We need to be thinking. If you're looking in terms of major shareholders, talk about the Mendelow's matrix and say they are the key stakeholders and what their requirement is. So this is what we should be looking at, right? So always, as I said, whatever the answer, whenever you are writing, whether it's on financing, investment, dividend, or whatever, we need to be looking all the time, addressing the vision, mission, and core values. Nothing should conflict with vision, mission, and the core values. Whatever we do, everything should be in line with that. So bring this into your answer script. These are the things that can get that additional marks for you in the exam. What influences an airport valuation? So I've gone very specially. Discounted cash flow analysis is the primary approach to value airports because they have long-term projections. Generally, the cash flow is very visible, not subject to too many fluctuations. So we can find out different revenue streams, aviation, retailing, real estate, external operations, etc. Then the other one is we take the airport transaction multiples, EBITDA into certain multiples. So there are clear challenges in comparing transactions multiples between airports. So these are the things that you should. So rather than just trying to be very general about asset-based, earnings-based, all that, try to apply these things into your airport case study. That will make a huge difference in your answer script, which the examiner will find it extremely difficult to fail you. As I said, when you write these answers, you must look at from the reader's point of view. Who is your reader? Your CFO or CEO or one of the top people. Why do they want to read your answer? That is because they want to take some strategic decision. So the answer should be written in such a way that it is so exciting. From the very first word to the very end, it should be very exciting. You and I know if we get an email, and if that email is lengthy, boring, too much of unwanted content, what will you do? You will probably put it to the trash. Or you might think, okay, I'll read it later, but you will never read it. But if it is something exciting, from the beginning to the end, you will read it. And that should be your answer. The response should be, wow, wow, fantastic. For you to get that one, you should be writing exactly to the point, very clear, not too much of jargon, short paragraphs, short sentences. I'm sure your answer will carry good marks. So what are the factors affecting the multiple factor valuations? Maturity of the airport. We know that any company will go through the life cycle. If the airport is already matured, it has already reached its full potential, then of course, you will not have too much of opportunity by acquiring that airport to make it grow, or there's no synergy in that kind of thing. So if it's a mature airport, your multiple EBITDA times, the multiple may be a little lower than when it's a growing airport. But if it's a growing airport, you do have, with your experience, with your 40 years experience, you can change that EBITDA heavily. This is why we are going to pay 22 times. Not that we want to wait for 22 times. We might want to recover it much early by changing the present EBITDA of 1,500,000, say 1,500 million. Because of our actions, we can change it. This is why we want to go for the airport company, because of our experience, our knowledge, that one. Of course, the large airports, they do have a broad airline base, so they are not that risky. So if you are a very risk-averse company, yes, you might go for this kind of thing, but the growth is very little. So don't offer big multiple factor for a mature company. Potential for yield improvements. The non-aeronautical revenues. Normally we know it's about 46% non-aeronautical revenue. If there's an airport with a lower non-aeronautical revenue, you might be able to go into that industry, that airport, and offer a higher multiple and take it because you can grow it. So potential for better earnings can be reflected in the transaction multiples. But we need to be mindful, if you are thinking in terms of taking this company and improving non-aeronautical, you as the senior manager finance should know there is a need for significant capital expenditure. We have to look at from all the angles, not just the investment and buying the company. How are we going to expand it? What are the changes we are going to do? Are we going to refurbish the shopping complex? So everything what we need to do, we need money. So we need to be mindful of that one. Financial strategy is all about three decisions: investment, financing, and dividend decision. So always we need to be mindful of that. Regulatory environment. Airports are subject to regulations all the time, because now in this country, in Norland, These people hold in the capital city the two main airports. So they do have some kind of sort of a monopoly over the airports, Norland, the capital city international CCI, and capital city MEX. And in the pre-scene, there's a little bit of hint about a sort of a controversial acquisition of CCM. One day, regulator might say, hey, you can't have both these airports because it's too dangerous for the economy. One company holding both the airports. The airports are the gateway to the economy of a country. And they might want even to, they might regulate and say that you need to sell one of these airports. Right. So these are some of the things. So we need to be looking in terms of pricing, what you can charge, because they go on this RAB, regulated asset base. They will not want you to charge too much from the airlines for the aeronautical part of it. And they might put certain restrictions on you. So if there are more restrictions, the valuation will come down. If there are less restrictions, the valuation can go up. Capacity constraints. If you have the maximum runaway or the maximum terminal capacity, then that can be a sort of, you might not have growth opportunity. But on the other hand, if you have an opportunity to put up another new runaway, if you have opportunity or space to put up a new terminal, that can make your valuation bigger. Potential, we need to look at always the potential, not the past earnings. What can I do after taking this company? Because these privatization programs are always, when the private sector takes over, they are going to make big changes. So we need capital expenditure. Again, we need to look at capital expenditure part of it. We need to look at the regulatory approvals for those changes. We know runaways in the community neighborhood is not something easily accommodated. Neighbors, the people might get disturbed. They might protest it. So the regulator may not allow it. So we, as a strategical advisor to the board, should be looking into all these things. Now, for traffic mix. Now, there are certain airports, non-hub airports. We do have one non-hub airport in our airport portfolio. The CCB is the non-hub airport, what we have. So we need to be looking that kind of thing. The big airports where there are business travelers, all that kind of thing, obviously the earnings will be much more bigger than the domestic airports. So business traffic, if the airport potential acquisition, what you are looking is having a lot of business traffic, that's an area that you can think of. If you can write these things in your answer script, what difference it will make for your answer script? I know that most of the students don't read all these things, but I read a lot of things in the airport industry, and they take a lot of documentation from various sources, and I have prepared these slides, and I hope these slides will help you to write a good answer. Customer dependence. How many airlines are landing in your airport, the target airport which you want to acquire? If it is just one or two airlines, then, you know, you are under some kind of a threat, because those people can sort of, one of the airports can go bankrupt, and maybe sometimes they might not want to sort of negotiate prices with you, because the airport industry is becoming competitive. They can go to another airport to land their airlines flights. So depending on how many airlines are landing in your airport, the target airport, that will make your valuation greater. Ownership structure. So we need to look at whether it's a freehold airport or it's on a life concession like 99 years, 40 years kind of thing. If it's a freehold airports, obviously you can take the valuation into perpetuity. But if it's a sort of a 99 years or 40 years concession, then we need to look at the time factor. Because as I said, if a government is going to privatize, they might not go for a complete outright ownership change. They might give you on a lease period, 40 years, 99 years, whatever. Or maybe that already a leased airport that you are going to reacquire from another company, and there's only 20 years left over. So then the multiplication will have to be below 20. So these are the factors that we need to consider. Airport competition. How many airports are there in your country, in this particular country? Now in our country, we know that 2 main airports are owned by us. So that also can be a factor. Competition. If you have many airports in the target country or the target country in which you want to acquire an airport, then the multiplication can be lower. But if you are going to get a more or less a monopoly kind of thing, then your multiplication can go up. I'm sure when they bought the CCM, they would have paid a big price because that gave them that monopolistic advantage. Trends in airport valuations. It is the attractiveness of the airport asset class. It's an asset with resilience, never die kind of an asset. Terminals, runaways, the towers, whatever we have. So we need to be mindful of all that. We need to have some kind of alliances with financials, because we need large finances to develop, to acquire, financial structuring. So right partnerships with alliances can be very critical to winning the deal, because when you're going for a privatization, sort of a acquisition of a government privatization, you need to prove your financial capacity to buy. So going with another big banker as your alliance partner will be the way to go forward. As I said, these airports will have economic downturns on and off, but they don't sit on it. They immediately, in 3 to 4 years' time, again, they will pick up. Airport is a unique industry which will never die. So long as the humanity will prevail in this world, airports will prevail. So this is something we need to be mindful. There are many industries we have seen in the recent past which has gone out of business, but never an airport. Airport will never go out of business. It might go through economic shocks, but it will recover. So generally, the airport transactions, acquisitions will fall into 2 categories: government-led privatization. Then some of the people who have invested earlier, because the airport privatization started in 1980. Now, after 30, 40 years, some of the investors who have been having these airport shares, pension funds, sovereign wealth funds, they might want to dispose their shares. In that case, you have an opportunity to buy those shares. So that's how the airport industry investments can come up. We can see for 40 years, we have had only 6 airports being acquired. So it's a fairly slow growth. If you want to be the world's best airport company, we need to be, in a way, we need to accelerate, but we need to be careful. Large investments, long-term investments, very, very long-term, 20 years, 30 years kind of thing. So we need to be mindful, because if you look at our company, our profits are about 1,465 million or something, profit after tax. But we have got, 1,465 million. But look at the share capital and equity and borrowings. It's about 65 million. So we will take about 15 years to recover the profit after tax earnings. So that's the nature of the airport industry. So we need to be mindful of that one, because these are book values. So when we take the market values, it can be much more than that. So 20, 30 years industry is this industry. It's not an industry like mobile phones, where we can deal it in 3 years' time. So governments are making airport privatization. They do have various objectives around employment, development, all that kind of thing. Not that too many airports are coming for sale into the market. It may be only one airport coming for 1 year. You need to be very agile, alert with your figures to negotiate. Never pay too much and never lose a deal because you are not prepared to pay the right price. So the business valuation is such an important thing in the airport valuation. You don't get too many opportunities. You miss one opportunity, you have missed $1 million transaction. You have to do a comprehensive assessment of the assets and capex requirements, profitability levels, what kind of refurbishment, expansion, what you are going to do, how are we going to fund it, what is our present capital commitments, can we afford to take this and do it? Because it's not just a 1 year kind of thing. Even today, 2021, you must be having capital expenditure down the pipeline projected for 2028, 2029. Some of the present existing airports may be going through refurbishment and all that, which can be very costly. And maybe your cash flow is already overloaded, not only for 2021 and 2022, but even for the rest of the years. So this is what I just want you all to look at. So as I said, if you can sort of at any time, if you want any kind of assistance, you can contact me at +94 77 321 9387. I'm Kumar. If you want to get any information, you can contact me on Cherry Academy. Cherry Academy LK at, Cherry Academy LK at gmail.com. And so this is a little presentation. I'll be doing few presentations in the days to come. If you're happy with my presentation, you can subscribe to my channel. Doesn't matter. Whatever whether we will do it, we will always try to help our students to get through this exam. So if you need any assistance, please call me on WhatsApp. Please write me an email, Cherry Academy, CHERRYECADEMY LK at gmail.com, and we will try to help you. So thank you very much for your patience in watching this video, and I pray that you will succeed in this final exam of CIMA, and that can make a huge difference in your outlook, in your contribution to the world. So please put every effort, go to the pre-scene very well, try to read as much as possible, do many mocks, work on your time planning, 20 minutes for planning, 35 minutes of writing for each 60-minute section, and keeping that last 5 minutes for finishing the answer script very well. If you need any kind of assistance, please call me and we will help you. If you need any one-to-one online classes at very affordable rates, we will provide that one. I do have a panel of tutors and they also will help you with all that work. So we are covering up many areas like business valuations, industry analysis, pre-scene analysis, and financial risks, and strategic choices, ratio analysis. Many of these things will be covering up in the next couple of days. Look into the YouTube tutorials Learn with Kumar or Cherry Academy, and you will find many of these videos. Thank you very much. God bless all of you and wish you all the best. Thank you.